In this presentation, we will review and adjust as needed the new account balances that we have put into QuickBooks Pro 2020, QuickBooks Desktop 2020. In other words, we set up a new system, a new file for QuickBooks. We had some beginning balances that we needed to enter as of the beginning date that we're going to be using the QuickBooks system. We used QuickBooks in order to enter the beginning balance as opposed to using journal entries, meaning that QuickBooks then did what it had to do for the other side of the transaction. Now we want to review those opening balances and see if QuickBooks has done anything that's unusual that we need to adjust for. There will be one unusual thing that we definitely need to adjust for, and that is going to be the opening balance equity account. It created this account called opening balance equity, an account not typically used in normal accounting, one that indicates that something funny happened, that QuickBooks had to do something in order to make the accounts balance, and therefore that is the account that we will be focusing in on and adjusting for. Here we are in Get Great Guitars. We're currently in the home page. We've got the Open Windows open, which you can open by going to the View dropdown and selecting the Open Windows list. Now we've entered the opening balances. What we want to do now is take a look at the financial statements and consider those opening balances, see if QuickBooks did anything funny that we need to adjust for within them. So to do that, we're going to go up top to the Reports dropdown. We're going to go down to the Company and Financial, then down to the Balance Sheet. Now, the balance sheet is really what we want to start off with typically. When we start a new system, we don't really have the income statement information because we're going to start as of a point in time. The income statement accounts, revenue and expenses, represent how we have done over a time period. And what we want to do is obviously start at a point in time, therefore no income statement accounts because they've all been closed out to equity, and then see what happens in the future. So if we put in our date, our beginning date, 12/31, let's make it actually 01/01/20, January 1st, 2020. We've entered these beginning balances here in the balance sheet. This is going to be our starting point for the year 2020. We're assuming that we had some information in a prior bookkeeping system. We, in essence, needed to take that trial balance and enter it into our system as of the balance sheet of the beginning of this period, the end of last period. In doing so, we didn't just do it with one big journal entry as we could have done. We could have just basically done a journal entry and enter all these balances. However, we had to enter the beginning balances, or we chose to, because it'll make it easier in some ways for us to have the supporting documentation, including the customer accounts and the inventory supporting documentation and the furniture and fixture and the accounts payable vendor documentation. So we had to basically go through and enter the customers, the inventory, the items, and the opening balances in that format. To do it that way, however, we only told QuickBooks the balance sheet side of the equation and not, in other words, only one account. We told the QuickBooks one account. QuickBooks then had to format something with some other account, which on the balance sheet we can see that that's going to be the opening balance equity account, the 79,896. Now this opening balance equity account is actually intentionally designed to look a little bit funny, but yet kind of legitimate account at the same time. In other words, it's an equity account. That's legitimate. It's got equity within here. It should be within the equity section, but QuickBooks is saying, hey, it's a little bit different. You don't typically see opening balance equity. It's related to us forcing something to happen and thinking that it should go to opening balance equity. Therefore, if we don't fix this, not the end of the world, we're going to put it into equity anyways. We would just rather have it in owner's equity. Main reason we want it there is because it looks kind of ugly to have it in the opening balance equity, that account indicating that something was forced within QuickBooks. Therefore, if you give the books to somebody else, they may look down on, having a balance in the opening balance equity, although it's in the equity section and it's not a big deal, but it could indicate that other things are not done properly and whatnot. So we're going to basically adjust that out. Now, the other thing we want to make sure that we consider is what's happening to the income statement side of things. Is there anything messing up the income statement as of our current period? Because remember, there shouldn't be anything in the income statement or the profit and loss statement because we're starting as of this point in time. We haven't done anything within the system as of now. So let's check that. If we go to the reports up top, we go to the company and financial and the profit and loss standard report. and we change the dates, let's say the range of the whole year that we're going to be working in, 01/01/20 to 12/31/20, there's nothing there. And that's great because that's what we would expected because we haven't entered any data for the current time period. Note that if we go to the last year, 01/01/19 to 12/31/19, we do have information. Why? We didn't enter anything in here because these are the other side of some accounts that we entered an opening balance in, and then they told us that it was then categorized as uncategorized income, uncategorized expenses. So just remember that if you're starting in the middle of the year and you enter these beginning balances, these things are going to mess up your yearly net income, and you don't want that to happen. You would then have to do an adjusting journal entry to close these out to equity. However, because we entered this in the prior time period, it will then roll out itself to equity. And we could see that on the balance sheet within QuickBooks by going to the balance sheet. And so I'm in the Open Windows balance sheet. If we go to 1 day prior, which is 12/31/19, and before I hit enter, notice now it says equity here. If I refresh the screen to the prior date, 2019, now it's net income of 5,500, which matches what's on the profit and loss here. So we don't want that net income on the current period because it doesn't belong there. It belongs in the prior period. We're starting as of this point in time. So it's best to start at the beginning of the year so that you don't have to deal with that kind of issue, because otherwise you'd have to determine whether or not that should be in the middle of the year or not. What you want to do is have a whole year's worth of data that's in the current QuickBooks system. That's what you'd like to do with the cutoff date. And it might be worth re-entering data for a few months for that to happen. But in any case, that's that. So this rolls over into equity, and there's nothing in the profit and loss in the current period we're in, 01/01/20, 12/31/20. So that looks good. All we have then is the balance sheet accounts. Once again, you want to review these accounts, see that you have the same information we have here. If you do not have the same information we have here, then what you want to do is basically change the dates. For example, if you're working at a later date, see if you change this date to the end of the year, 12/31/20, the end of the whole year that we'll be working on. If any of these numbers change, the problem you have is probably a date problem. Go into the detail of whatever number that changed and think about changing the dates within it. So for example, if accounts receivable changed, I could go into it. I can then go to the prior year, 12/31/19, and refresh, and then go into one of these type of activities and change the date here. Now, again, you don't want to be changing dates all the time. It's not best practices from an audit trail standpoint, but it can help you to quickly adjust things within QuickBooks. Okay, so I'm going to close those back out, back to the beginning balances. So I'm going to change the date back to 01/01/20. And so these are the balances you're going to want in there as of this date. So check that out. If you have any problems, you can go back to the prior presentations. Now, the funny thing that we need to do now is this, of course, opening balance equity, the 79,896. What we'd like to do is just take it out of opening balance equity, put it into the owner's equity account. So everything's just in equity. That's going to be our one equity account that everything will roll out into. So to do that, and another way to look at this, by the way, is if you're an accountant that likes to work with debits and credits, note the other report that you want to consider that's actually cleaner to look at, to just look at the report and the amounts in there, is called a trial balance. So let's review these account numbers based on a trial balance as well, and you'll see it's a bit cleaner to look at, although it deals with debits and credits, which can be a little bit confusing. So let's go to the reports drop down. To get there, we're going to go to the accounts and taxes, and we're looking at the trial balance. Trial balance, changing the dates up top to, let's make it 01/01/20 to 01/01/20. And notice how much shorter this is. We don't have all the subcategorization. We've got the checking account, the accounts receivable, inventory, furniture and fixture. Now it's a little confusing because we have the credits over here. If you don't know what a credit is, that can be a little confusing, but I mean, it's pretty straightforward that, we have the balances in there, even if you don't, even if we're not thinking debit and credit format. And so there we have those. And what we need to do is get this opening balance to close out here. Now, there's no form that we would use to do this, like an invoice or bill or anything like that, we would have to default to basically a journal entry. So if you're someone that likes debits and credits or knows debits and credits, you can say, well, I can journal entry this by going to the company tab and then going to make journal entry. So you want to go to company and then go to make general journal entries. And you can go here and enter the debits and credits within here. Now we're going to use registers to do this. So what we're going to do is say, okay, this balance is in the opening balance equity. So what I'm going to try to do is not use journal entries and use registers here, and then I'll show you the journal entry after we have created it. So one way to get into the register, and this is going to be registers that look like check registers, but they operate in an up and down type of system, so that we don't have to use the debits and credits. So to do that, we're going to go to the lists dropdown, to the chart of accounts. So we're going to go into the chart of accounts. We want to go into the opening balance. What I want to do is make this one go down to 0. So what I'm going to do is just double click on this account, double click on it. We then see a register. So the register looks kind of like a check register. So we have the kind of check register which has increases and decreases. We are in the opening balance account which has 79,896 in it. We need it to decrease to go down to 0. So notice this is just another format of a journal entry. So here's how basically the journal entry will look. We're going to say that the decrease as of 12/31 is going to be for the full amount, 79,896, and then the other side of it is going to go to the equity account. So I'm going to select this and say I want to take it out of this equity account, the opening balance equity account, and put it into the what do we call it? The owner's equity account. And so that'll do the journal entry. And so we'll record this. So we'll record. And it says, hey, you're about to record something to retained earnings, which we don't normally do, but we need to in this case. So we're going to say, okay, I know that. Thanks for the warning. And so there we have it. It has gone down to 0 here now. Let's now go back to our trial balance or balance sheet and see what happens there. I'm going to go back to the balance sheet. Let's go on this side. So on the open Windows balance sheet, scrolling down, we see the opening balance equity has now disappeared. All we have is the owner's equity. And if we go to the trial balance in the open Windows, we see the same thing. Now note that in the trial balance, it actually shows you the opening balance equity with a 0 balance, which is kind of nice because it's doing that because we had activity in it. And that allows us to auto zoom into it. So it's kind of nice to look at the trial balance to show any account not only that has balance in it now, but had activity during the period in case we wanted to go into it. Now, if we go into either one of these, if I go into the opening balance and change the dates to the prior year, 01/01/19, we're then going to see the activity. There's our big adjustment. The other side going to owner's equity. It was in the format of a journal entry, even though we entered it into the register, journal entry, debits and credits, journal entry. Everything comes down to debits and credits, but this is labeled a journal entry, which typically is debits and credits, even though we entered it into the register. And then we have the owner's equity. And if we go into the prior 01/01/19, and there we have it again. So here it is. If I was to double click on it, there it is here. And then if I was to double click right on this general ledger, nowhere else, you want to be right here, that'll show you the journal entry. Here's the actual journal entry format. And we know that these are equity accounts. They have credit balances. This one was going down, so we had to debit it to do the opposite thing to it to make it go down. And equity's going up, so we credited it to make it go up. So there's our journal entry. Closing this back out, closing this back out, closing this back out. And here's our trial balance. So once again, here is our balance sheet, end of the day balance sheet after we've completed this process. And then the trial balance, which is probably easier to actually look over. This is what we have within our trial balance thus far. So you want to review those numbers. If anything looks funny, auto zoom within it, see it, and then check the dates. The date range is often something that will be off if there's some kind of issue with it. Also note that this, if there were income statement accounts, revenue and expense account, trial balance would show them. There are none here. So this is a post-closing trial balance, you could call it, meaning a trial balance at the end of the prior period, now having no timing accounts, no income statement accounts. And so it stops at equity, assets, liability, and equity.